Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's going on in investment markets and what to look out for in the days and weeks ahead. And in fact, this is going to be the last show of 2019 until the new year. And it's been an incredible week. If you remember last week's episode, I talked about sitting and waiting and watching to see what would happen after three events that were occurring in the background. So they were the US Federal Reserve making an interest rate decision, which they actually decided to do nothing. They kept rates where they are, and that was what people had expected, so that didn't have much of an impact on markets. But the two key events last week were the UK general election and, of course, the US-China trade truce. Now, if we concentrate on the first one of those, the UK general election actually gave us a somewhat surprising result. Everybody expected the Conservatives to win, but they didn't expect quite the majority that they got in the end. In fact, it was a landslide. And what was fascinating, if you sat there and watched when that exit poll came out at 10 p.m. on the election night, you would have seen the pound jump over 2% against nearly every other currency, particularly the dollar. And we went up to about $1.35, which is a key threshold on the currency exchange rate. Now that has an implication for stock markets, obviously. For the FTSE 100, it was a little bit of it held it back, because when the pound rallies, the FTSE tends to fall. But such was the euphoria about the election result that even the FTSE 100 the next day managed to make some decent gains. So we saw the pound rally was the first thing, but other assets rallied too. So if you looked at the FTSE 250, for example, which is the index of more domestic focused stocks. Now that rallied incredibly strongly in the next 24 hours after the election result. In fact, it was up about 4 to 5%. And the reason for that was because the idea that we had a strong government which could actually get Brexit done, to use one of Boris's rather annoying phrases, meant that they felt there was more certainty. And in some ways, it also meant that some people believed we could have a slightly softer Brexit, perhaps, because therefore Boris had the opportunity to be a little bit more moderate in his views on what Brexit would be. Well, that was obviously a boost to the UK economy, or well, the idea was it would be a boost to the future of the UK domestic economy. So UK domestic stocks rallied. So we saw that strongly in the FTSE 250, but the particular sectors rallied strongly. Any sector that was potentially going to be exposed to Corbyn's idea of nationalising those industries, so if you think about utility companies, or there was house builders in there, they rallied incredibly strongly. Those particular stocks and sectors of the equity market rallied strongly. So some of those were up as much as 8, 9, 10% in the next 24 hours. So we had a huge sort of euphoria in equity markets, and people started to talk about whether the UK had finally become somewhere where people wanted to invest again. Now, if you looked at bond market, gilt yields jumped initially. Now, they followed the pound higher because it was a bit of a risk-off trade. People left gilts and bonds generally and started to buy risk assets, so that was stocks and shares. But then the general euphoria that was felt around that UK election started to fade in the days afterwards. So this week, for example, we still had the stock market higher. The pound was initially higher, but it has since pulled back to the same level that it was prior to the election result being known, or that first exit poll. And that's because Boris Johnson is being rumoured to want to table a motion to be able to put potentially a no-deal Brexit as a option or possibility in law. So there would be an idea that he would get Brexit done by the end of next year, for example, but if we didn't, we would almost crash out. So no deal suddenly came back on the table as a bartering chip, and therefore that spooked markets. And don't forget, if a no deal Brexit possibility is even there, it tends to make the pound weaken. So the currency exchange rate is being very volatile at the moment. So there were people who were hedging against a rising pound ahead of that election result, will have actually enjoyed that hedge that would have made them actually protected their portfolios, I should say, in the immediate aftermath, but since then the pound has pulled back. So anything that had overseas exposure, while it would have suffered in the immediate aftermath of the election, they've actually benefited in the last couple of days as the pound has weakened. So what we've got now is we're trying to see let the dust settle and see what happens going into the end of the year. Over in America, the big story was, of course, the US-China trade truce. Now, phase one of the trade deal was apparently agreed. And I know there'll be many of you thinking, haven't we heard that before? And yes, we have. There was apparently a trade truce agreed a couple of months ago, but this is meant to be the real deal. Unfortunately, we don't know any details of the deal because they won't actually release them, and that might not be known. The details of the deal might not be known until some point where there is actual official signing of that deal, and we don't even know when that's going to be. So it feels like it's a lot of lip service to the idea of a deal, and there's some people who've been analysing what some of these sound bites from both sides about what could be in that deal actually mean, and it sometimes suggests that perhaps we are no closer to a deal than we were, say, a couple of months ago when the original announcement of a deal was made. So we seem to be back in that cycle of a deal, possibly not a deal, maybe some disagreements between the two, threats of tariffs, and then we go back round again until we get to the point that they say they're going to make a deal again. That cycle has been going round and round now for over a year. And while we hope there is a trade deal, the chances are we're just one stage away from possibly another breakdown. But we've got to see what happens in the new year. But the point is, with two big key risks removed from the markets, seemingly at least for now, it's given almost equity markets and investors the permission to go a little bit crazy. So euphoria is at almost a multi-year highs, multi-decade highs, in fact. If you look at the fear and greed index that I sometimes refer to, that's often on CNN, they produce the fear and greed index. It's now at a point where it's extreme greed is the emotion driving markets. And the Santa rally has almost got well and truly underway in the last few days. And if you look at stock markets globally, emerging markets are almost up 4% for the month to date, so that's the month of December. Even developed world markets, if you look at the UK, US, they're up between 1% and 2%, having recovered from an initial sell-off at the beginning of the month. So everything seems awesome at the moment. We've got multi-year highs across the globe in various stock market equities, including in Europe and the UK. On the FTSE 250 we had that, and of course in America. And the fear index, the VIX, even fell below 12 again. Didn't quite hold below that level. That seems to be a key level, whether we're going to get a fall below that 12 to go down to almost single digit levels we had a couple of years ago. It seems to be the 12 threshold we seem to be bouncing away from. At the moment we're between 12 and 13. It's something to watch, because if markets are going to continue to be calm, then it would need to break below there, which would be very positive for stock markets. So as we enter the last stages of 2019, the last week has been a pretty good summary of the rest of the year. So whenever we've had some progress in the US-China trade war tensions, then that has been a positive for the market. So now we're at the point where there seems to be a deal. It is pretty euphoric at the moment. Also, if you consider central banks, bank liquidity has been the biggest driver this year. So the central bank going back into easing mode has been the big driver of equity markets globally and pushed them to new all-time highs. The Fed is still in accommodative mode, so the market loves that. And finally, political uncertainty has been something that's buffeted markets at different points of time throughout 2019. And at the moment, we had a period of calm, and so again, markets like it. The one thing that has disappeared in the last week is the idea of a recession. It was a recurring theme of 2019, when markets started in the summer in particular to price in the prospect of a recession. Particularly you'd see that in bond markets. Now, that has started to recede. People are so euphoric about what's going to happen that they almost don't believe a recession could happen in 2020. And if you think about, we talked a lot this year about the inversion of the yield curve in bond markets. That is a leading indicator of a recession. It has been fairly reliable in the past, but it does often mean that the recession happens up to 2 years after that. So we're still looking at 2020 as a possibility for a recession. We just don't know at all whether that indicator will be reliable this time around, but the market is almost discounting it as even a possibility. So as we leave 2019 and head into 2020, the market is very euphoric. But it almost resembles what happened at the end of 2017 when markets were also very euphoric. And then they got into 2018 and the markets fell sharply. So it's not to say they will, but the idea that all the negativity, recessions and things like that have been priced out by the market, it could be a warning sign, especially bearing in mind all that extreme greed. So we have to bear that in mind when we go forward. If you're interested in an outlook for 2020, I do one for 80/20 investors. It's being produced this week and you'll receive it at the end of next week. So if you want to get that, then sign up for a free trial. That is it for Damien's Midweek Markets this week, and of course, as I said, for 2019. Join us again next year. Hope you will have a good Christmas and New Year. Don't forget you can get hold of me via email, damien@moneytothemasses.com, via Twitter, moneytothemasses with the number 2, and of course Instagram and Facebook, and make sure you subscribe to our YouTube channel.